Welcome to the Integrated Advisory Series, where we talk about the evolution of wealth management and how a client's most trusted advisor, their accountant, will lead this evolution. I'm your host, David Judy, and I'm joined by my co-host, partner, and good friend, Tim Copeland. Welcome back to the third episode of our Integrated Advisory Series. And in this episode, we're really going to focus a lot more on what's in it for you. What is the integrated advisory philosophy, vision, and why is this an opportunity, and why is this the time that firms should be looking at this as an option? So I want to dig a little more into that. I've got a couple notes with me. So we're going to try to get away from our little bit of rambling that we normally do, talking about the warm and fuzzies. I'm a business owner. I hate to break it to anybody, but I open the door because I want to make a profit. And I want to make a profit by doing the best work I possibly can for those I serve. But I still want to make a profit. This is the theme. You can be a lot more warm and fuzzy in this episode, Tim. Tim, why don't you share what is the vision and for integrated advisory, and not just for integrated advisory, but how this ties into Wealthco group of companies and everything that we do.
Absolutely, I'd love to. So I think the vision for integrated advisory is really to build a community of CPAs across Canada. And I think, the like-mindedness of what we're looking for is people that buy into an integrated advisory philosophy, okay? And really what that is the understanding that clients are looking for simplicity, as we've talked about in the prior series or episodes. They're looking for a place that they can go that they can trust. And they're looking for their accountants to fill that hole.
Right.
And so and it's again looking around the world that is a common theme that's been successful. We're really looking to build that community within Canada.
Well, and I want to talk as president and founder of Wealthco a little bit. That I've been blessed. I've had an opportunity to build a number of multi-million-dollar companies. A few of which have had some liquidity events and have done very, very well. I will tell you right now that we're all in, meaning that, we made a decision a couple of years ago that the only distribution we were going to be doing moving forward was through CPA partner firms. And, that was a little bit challenging for me initially. You laugh. But, once we made that decision, it's become crystal clear. And, I think that's an important aspect to talk through when it comes to all in. If you're going to have to bet on a horse, maybe that's not the right analogy, but if you're going to bet on a horse, I'm going to bet on the CPA firms. I really am. I think that not only do they have everything that's required to absolutely disrupt the wealth management industry in Canada, but they're exactly the partners that I want to be in business with.
Yeah.
So,
well, I like guaranteed bets.
It still all comes down to
I think rarely do we have a crystal ball in life. Okay, it's just kind of how it goes. But in this example, we do, and you've heard me talk about this before, but this already is proven. Okay, it's already worked. It's a safe bet, and it's going to happen in Canada. Yep. So it's coming. We know it's coming. The opportunity we have is that we've been ahead of it. We joked about in, I think, the first episode that I told you 10 or 12 years ago this would change quickly.
Tomorrow, yeah, it's coming. It's
taken a little longer in Canada, but I can safely say we're there now. Yeah. And that's pretty exciting. And I think the vision really is about taking that best-in-class approach, all the learnings that we're going to continue to share as we go through these episodes from firms that have had success doing this. And that's really where we're...
And I think from our perspective, we're not looking for a referral model, right? Correct. Just building something where, here, throw us a lead, and we'll go sell some insurance and investment products. And I believe that will be where everyone starts to approach it. it's interesting. Even the Institute's talking today about we're going to make some changes. I think Ontario's already done that. Maybe you can speak to that.
Why don't I speak to that? So when the CPAs merged in Canada, the regulatory environment, they had to pull CMA, CGA, CPAs, professional standards together and kind of figure out something that was going to make some sense. And one of the things was within CMA and I believe in CGA, there was much more flexibility to be involved in referrals and opportunities to execute differently on products than traditional accounting services. And so Ontario actually passed legislation, I think it's a couple of years ago now, where they basically followed a model, which is what the rest of the world is already following and have been following for decades now. And what that is that it's okay to be compensated based on referrals as long as there's no independence issue or conflict and it's fully disclosed and approved by the client. There's no games, no hiding stuff. So basically let the client decide what's right for them. And I think that's where we're seeing that shift. It's already mandated in Ontario. And the nice part is that we're seeing today is it's trying to be, that standard is trying to be harmonized across the country. Had lots of conversations in Alberta. We're very close, I think, to a member vote that'll likely go the same way it did in Ontario. And that's looking like August 2020. And the other provinces around the country are looking at doing the same types of things. So I feel I'm very excited about that. It's needed. It's going to level the playing field and allow the profession to continue to sit in that trusted and value-added position. Without it, they're going to be kind of trying to fight a bit of a competitive battle with the banks with one arm tied behind their back. And so I think we're at a stage now where that's shifting. And the mindset's going to start to shift, but all that'll mean is if a firm thinks the answer to this is, oh, great, I can now refer to investment firms or insurance firms or law firms or other mortgage brokers, whatever, I believe that's flawed. And I don't think that'll be the model based on what's happened in other parts of the world that will be successful. Because all it does, you're not leveraging the trust that you have as an accountant. You're sending them out the door. You're not managing that client experience, and you're not really delivering service. So the optics of professionalism shift dramatically.
And if I'm a business owner client and you refer me to somebody and you have true transparency, and then you say, oh, and by the way, this is how much I'm receiving to just refer you to this outside third party, I'm not sure from a client perspective those optics are going to work as well.
However,
as
if
people would
you're
like.
delivering service and you're a quarterback,
exactly,
and you're building a wealth management philosophy like we talked about, that you can communicate clearly to your clients as to how you're changing your relationship with them. You're deepening the relationship.
So let's get a little bit more specific because I think that makes sense. So we talk a lot about having a turnkey business model rather than just saying, hey, great, we can help you execute on some of these financial planning initiatives with insurance and investing and things of that nature, group insurance, whatever that might be. We're helping firms build that business model. Yes. Talk a little bit about that. So why would I even want to deal with the integrated advisory business model that Wealthco provides?
Yeah, I think it firstly starts with us getting to know accountants and their firms and really understanding where they sit in their evolution as a firm. Have they moved towards specialization or are they still acting as generalists? Where do they sit in terms of delivering personal financial planning? And then ultimately, once we get a very good understanding of where the firm is at, we're able to start to look at how we can consult to them and how we can add some value to their model. But it is their model and their client relationships. That's a big difference. We look at firms today, they're our clients. We've got aspects of what we're able to bring to them as a resource partner, whether it's portfolio management or insurance or other areas. But in the end, the clients that we're helping serve are their clients. Exactly. And so everything that we do with firms is about building tools and best practices and coaching and a model around the firm that positions them very squarely in that trusted advisor seat. It's not about building out other firms' brands. It's about elevating the accountant and the firm in the role that they already have with the client.
Well, I think that's why we've built the integrated advisory brand out a little bit more too.
Yes.
So rather than it being a product solution brand, because that's really what Wealthco is, we've been doing that for 20 years. Integrated advisory is this whole idea of creating a community and a brand that all of these firms can say, we're part of this,
Right.
and we're part of this because we're elevating the experience that we want to bring to you.
Right.
Right?
Right, and we participate in Strategic Coach, but had the
Yes.
benefit of that,
Yeah.
and the term abundance and
Yeah.
is instead of scarcity tends to be part of our lingo, and I really see this as an abundance story. We're trying to break down the competitiveness between firms and understand that they're really not you shouldn't be so worried about the other accounting firm as your competitor. It's really how do we have to evolve as a profession to combat all the change that's going on and the banks and other competition that's going to disrupt the accounting profession. And I think it's how can we come together as a community, share best practices. We're looking in the future to, as an example, have conferences. We want firms to be able to come together, work together.
And we do that digitally today.
Yes.
Because most of the firms that we actually have under our model today have their own financial advisor, a financial planner. All of them are CFPs. And we actually facilitate that on a weekly basis, bringing those people together and sharing those best practices and helping them build that aspect of the business. So.
Yeah, and great conversations and lots of learnings. We talk about the learnings we've had. Well, we're always learning. We're the world's changing. We're trying new things within the firms all the time.
The more I know, the more I realize how little I know. Yeah, exactly.
We learn lots from the firms too in terms of different things that they're trying and that are working. And so that community is a really big part of this.
Yeah.
And firms are going to be at different stages of this. There's larger multi-partner firms that have very well-established specialty divisions that we work with. And there are smaller firms that are trying to evolve into different ways. And I think really what we're trying to do as a community is support all of those members. We've got firms that can work with other firms because they've got some unique skills that a smaller firm might not have that we're able to bring to the table through that community. So it's not just about insurance and investment products. It's about all of that wealth management philosophy that we're trying to expand upon.
Yeah. Products are a byproduct of good planning,
Exactly.
good conversations.
Yeah.
You touched a little bit on stages, and I think that's really important to understand, is that we have a number of different firms at different stages of development. Our job is to help them get to the next stage and to elevate them. So why don't we talk a little bit about stages? So what does that mean, or how would that work, or how do we assess that?
Yeah, I think we go through that sort of what I'll call an initial discovery with the firms. That's kind of stage one. It's looking for that commitment, that belief that this is important. And I think we've had great success in having great conversations and opening mindsets around that. And that's sort of that first stage. And it doesn't take a lot for firms to understand they need to evolve and change. Once we get that commitment, we go into a bit of a launch phase where we're, internalizing, in most cases, a financial planner within the firm. We're helping coach hire. We're building tools and processes around the firm. And so that initial stage is really about getting it set up. Okay. And
so best practices, right?
Best practices.
At the end of the day, we have a great team of people. We have 25, 30 people that are fully dedicated to this part of our business and to growing our integrated advisory model. But our philosophy has always been replicate, duplicate, build systems and processes that all of our strategic partners can leverage and utilize. And onboarding firms, getting them up to speed, how do we introduce products and services to their client base. We're not figuring that out as we go. No. Fortunately, we've had a lot of experience with that, and that's a big part of what we do.
Yeah. So just phasing wise, so that first phase is that a bit of that launch, and there's a progression towards a true wealth management model, okay? And it takes time. It's not a switch. Even though we talk about a turnkey business model, it isn't a switch.
Right.
There are some cultural pieces of accounting firms. There's training, there's understanding, there's individual partner commitment. There's all these things that take time and confidence.
Well, and small things like, how do I even introduce this new business unit to my clients?
Right.
And, you know, I think early on we thought, well, how tough is that? Maybe everyone can figure that out and they'll just go through it. You know, today we have scripts and dialogue and even, you know, email campaigns, things like that really educate all the clients of the firm to understand this is what they're offering and this is the value proposition, and not taking a whole lot of that for granted, making sure that it's templated and set up properly.
And the whole idea, I think of this is we've proven we can make this successful and profitable.
Right.
We've done it. Okay. Did it happen as quickly as we wanted?
Absolutely not.
But I think in a decade or so here of working with different firms, we're getting faster and faster at learning, building it in, gaining commitment, and evolving the culture and the service model within the firms. We believe that, you know, within a 3 to 5 period, we can kind of go from sort of that initial launch to really at the end. You know, the first few stages is you'll get early adopters, you'll have some partners that are, you know, they're rainmakers, they jump in, they're quick starts, you know, they want to get going, and we'll build success from there with great client service and great things that happen with those clients. It just continues to build confidence in the firm. Other partners will then get more involved, and, you know, you then evolve to a stage where everybody's rowing.
Yeah.
And then ultimately, I think that the final stage where the most successful firms get, and you can see this in the United States, and these are firms that are managing billions of dollars in wealth, you know, and it's almost gotten to the stage where the way clients look at the firm is completely different. Rather than thinking of them as accountants that are doing tax filings and year ends and things like that, they see them truly as advisors. And they don't think of them as accountants anymore. They look at it as a deeper relationship that covers all aspects of their life. And every client has come to expect that that's how the experience and what is going to be delivered to them, as opposed to it might be something that some of the clients take advantage of. So it is it's an evolution.
It's just a core value proposition for the firm. It's not some offshoot that they get a few people into. But I think at the cornerstone of that is the firm keeping their independence.
Yes. Right?
And for us to understand what our role is. And our role is to elevate the professionalism. And you use a phrase, because we talk about trusted advisor, and then we talk about the transition from trusted advisor to
the most valued advisor.
Right.
And I think that trust is based on, as you say, that foundation of ethics, independence, objectivity, which is at the core of that, and competence. You've got to know what you're doing, and accountants know what they're doing. So it's a matter of transitioning now. When we move to more most valued, you've got to start to look at other pieces. You know, integrating deeper conversations, simplifying their life, being involved as that quarterback, overseeing, and executing in all aspects of that value chain. Right. And when firms get there, it's very clear that the clients aren't going to go anywhere. They're going to stick around. They're not going to find that in other firms.
Well, in my experience in the wealth management industry, we talk a lot about persistency. So I still remember, as a senior executive in a $6 billion firm, we spent hundreds and hundreds of thousands of dollars trying to figure out persistency. And we looked at touch points and types of products sold and all sorts of different factors. And at the end of the day, the most prevalent factor on persistency of clients was numbers of products and services.
Right.
So the variation and the depth of products and services that you can deliver to a client exponentially affects the persistency of those people staying. Because I think a lot of people are going, well, where else am I going to go get this?
So we've talked a lot about the effect on the client and a bit of the client experience, and I know we're going to be talking about that in another part of this episodes here. But I do want to bring it back to a bit more of the, well, why should we do that? Okay, we've got...
Show me the money part of the
show me the
conversation.
money. That's where you started. And I think really the true opportunity is to move the firms from only being able to collect revenue based on the clock to being able to generate sources of revenue along all aspects of that wealth management
Right,
chain.
on all of those products and services.
So it's portfolio management fees based on services that are being delivered, insurance fees based on services that are being delivered, all of these types of pieces. And the benefit of those other portions is it's not a 7-to-1 employee model like it often is in the firm,
Right.
where you need 7 people that are working for you to run the work and manage it, and you're trying to drive a third out to the bottom line, where then that's your compensation as a partner. The margins on the other pieces of wealth management are substantially higher, and more importantly, when you start to look at the value of the equity in your firm, we take firms from a multiple that might look like 0.75 on gross revenue on the low end, maybe 1.25. And we help them evolve to really capitalize on the client relationships and the equity value that exists there. It's not uncommon in firms that we're working with that we're able to see multiples that look like more like 3 or 3 to 5, depending on how they embrace it.
Absolutely. That amazed me when I really got to understand the value of an accounting firm. I would have 1/8 of the staff. I'd be very focused on recurring revenue, building my business model, where I could get up January 1st and it didn't make any difference how many hours I spent. I knew pretty much how much I was going to make as a foundation of income. And I've always worked in a world of a 3 to 5 multiple, as long as you're focused on that recurring revenue. And that's the real opportunity, I believe, for firms, professional firms that are looking at making that transition. And that's our job. Our job is not just helping them, deliver better products and services, but our job is helping them truly increase the equity value of their firm.
Absolutely. So I look at it when I was within the firm and we first started working.
I don't think you really believed me on how much the multiple was in the business at first.
It took me some time.
They're paying you how much? I know you. No.
But we were able to accumulate wealth and different parts of that value chain, through assets under management and insurance and different pieces. And I remember a time where I was involved in probably overseeing $100 million of investments.
Yep.
We were helping on some of the insurance work. And in the firm, I was able to generate revenue that looked very comparable to a traditional accounting partner's revenue base. But the difference was I had an admin assistant.
Yep.
And when you started to really look at the overhead and what was required to service that amount of revenue, it was substantially different. And that's really what leads to the multiple difference.
But it's also the real key of going, are you just going to give that away? So is someone just going to write you some little check going, thank you very much for the referral?
Right.
Or are you going to look at this truly as the foundation that you're building a business on that's going to significantly affect its value going forward?
Yeah,
you can
take the easy road and collect the referral, and it might improve your bottom line. But you create risk of client retention, who controls the relationship, what that's experienced like. If something doesn't go well based on that referral, you got no control. Whereas if you're building it as a service in a business unit, you can manage all of those pieces. And more importantly, now there actually is some equity value relating to what you're doing longer term.
So I want to just touch on that because I think we'll come back to it in a future episode. But risk. I'm a CPA. I built my practice and the value of my practice based on trust. It sounds risky to go and say, now I'm going to start, peddling insurance and investment products in the worst, connotation being a straight referral model. How has Wealthco and the integrated advisory model mitigated, some of the risk that's associated with telling people this is what they should do?
Well, I think it's because we're not like the industry. Yeah. We're not here to sell for the sake of selling. And it all starts with planning and the client first. And I think once we have time that we spend with firms to have them understand that we get that, I am a CPA, CA. I've lived in the firms. I know how we think. Mm-hmm. We don't like selling. It's a bad word. We want to make sure that it's objective. And so everything has to start with the planning at the core. And but when you get to a stage where now you have to execute, there is some mindset shifts that have to happen where you're looking at things and saying, am I really adding value? I've done a plan. Here it is. Here, it's an event. Here you go. Now go do something with it, and hopefully you follow it.
And it collects dust on a shelf.
Right. So
the beautiful binders that collect dust on the shelf.
So then I can send it out the door, and I can go deal with somebody else to help you take care of that. And there's really no certainty that it'll be followed or executed properly. So it's just that shift of work. We got to be involved in that process, and more importantly, we have the skills as accountants to be involved in it. And it's a confidence issue. It's being able to look at that and going, my knowledge of how I've been trained, what we have. Now, there's areas we need some support on and which we help bring.
Right.
But it's got to be that confidence to go, clients want this, they want it from us. And I think our experiences, we've proven that.
Well, I think, too, the whole idea of an integrated advisory model is not that you have to always displace an existing relationship. So we may have situations where, they're happy with their investment advisor who's doing a great job for them. Can we bring that person into the integrated model? And we may be doing other things. Our challenge is, in many cases, that's not the case. But I think that you've got to be open to that, and you've always got to have the client's best interest.
I'm glad you brought that back up. That is a foundational piece of success.
Right.
If all this is you need to change who you're working with on your team, we truly don't believe in an integrated advisory model. An integrated advisory model is based on teamwork, and it's based on what's right for the client. And if an investment manager, in your example, is doing a fantastic job, we're going to look together through this process with the accountant on, is there things we can do to complement that? How do we work more closely together? How do we create that communication that brought, as an example, you and I together originally? And that really is at the core of what we're trying to do with this integrated model. But there's many instances where clients aren't being serviced properly. They have issues. There's a better way to look at it. And we can't just ignore that. We've got to be able to, if we're truly going to look after our clients, be able to go, we've got resources there. Okay, we've either brought them in-house or we've done it through resource partnerships that we trust. And I think building that builds a lot more confidence with the client. We do have an episode that we will talk about some of those resource partnerships and what that looks like. But yeah.
Well, and hopefully you found that of value. I think it's so important to understand philosophy. I think with every quality business relationship I've ever had, it starts with making sure you share the same values. And at the end of the day, when things don't go well, how do you react?
Exactly.
Thank you for listening to this episode of the Integrated Advisory Podcast. If you're tired of feeling short on time and are looking for a better way to grow your firm, I want to invite you to download our free ebook, 7 Reasons Why CPAs Are Transforming Their Practice with Integrated Advisory. Visit integratedadvisory.ca/7 reasons. That's integratedadvisory.ca, the number 7 reasons, to download the free ebook today and see why CPA firms just like yours are transforming the wealth management world. Visit integratedadvisory.ca /7 reasons to download this free ebook today.